So
And Sagar,
broadcast started.
is it live?
It will live in 10 seconds.
Okay. So Pyali, once Sagar just mentions is it live, it is live, you can start.
Right.
Yep, it's live.
Good morning, everyone. On behalf of GUSEC and TAI Ahmedabad, I welcome you all to a curated webinar on how to create an investable startup post-COVID. An extremely important topic, I think, and is a need of the hour too. Challenging times are particularly hard on entrepreneurs, and it is safe to say that this current crisis is like none other faced by small businesses in the recent past, and is certainly quite unnerving trying to tackle all the unique issues at one time. So today in this discussion, we will focus on what should they do to ensure that not only they survive the crisis, but also come out of it stronger and make their startup even more investable. So let's hear from an investor's perspective, specifically for startups, on his views, best practices, and his great advice. So I'm very pleased to welcome our guest speaker for today, Sushant Mitra, the founder and CEO of Lead Angels. I also have Dheeraj, my colleague from GUSEC. So Dheeraj, over to you now. And
Thanks, Pyali. Thanks for this. And just continuing with the session, I'll just quickly read through about Sushanto's introduction. I know him for a good time now, and I've seen him working with the early stage companies, especially with the pre-growth and idea stage companies, and the companies who are looking to raise their pre-series and series rounds. So I understand with his expertise of this domain of over 15 years now, he has quite a wisdom which he can share with us. And I still believe Lead Angels is still active in these times. They are still looking for deals. They are still exploring propositions. So they are not somebody who can be put on a back foot because of this crisis. They are still an active investor community. So just reading through his bio, Sushanto is an entrepreneur himself, and within the early stage ecosystem, he has been present for more than 15 years. Founder and CEO of Lead Angels, one of the very active and established angel networks of India. In his past stint, he was the CEO for Society for Innovation and Entrepreneurship, which is SIGN, which is an incubator at IIT Bombay. And he was also a director at Hyderabad Angels. So he has quite great grip over the investment proposition in India. The session modus will be that we have some of curated questions for Sushanto, which we would like him to answer. This is not a monologue. This is more of a Q&A session. People who are present into this webinar can also put up their questions in the chat box and a Q&A box. At the end of the session, our moderators will curate those questions and we'll come back with your questions to Sushanto also. So I think our session should take another 20-25 minutes, wherein we'll try to get answers for most of the questions around how to create an investable company around this crisis area. And then we'll take the participant questions. So Sushanto, welcoming you to this webinar and thanks for your time. I understand these are very busy webinar calendars right now, quite a few happening during the day. So thanks for this slot. Starting with, would you like to probably add on before we start off with the questions?
So I think these are very different times, and so a lot of things that we learned in the past, and I've spent 15 years in the startup economy, and I think we are going the next 15, the next few years will be very different from what we have seen in the past. Some of it is obvious as we speak today, but a lot of things will be coming up in the next months and years, which will completely change the landscape of the startup world. So some things will remain, some things will change. And it is not without precedence, because even when 9/11 happened in 2001, or when we had the 2008 financial crisis, there were huge changes which happened. So happy to take your questions.
Great, Sushanto. So let me start this thing by asking you one of the questions which I think everyone has on the mind. So given that the COVID as a disease is largely unknown right now, how it's going to impact, So what are your suggestions for the companies who are deeply impacted by yet to be funded? That's most important. Somebody who's in the discussions of raising a round or yet to be funded, who's looking to raise a round in another quarter or so. What's your suggestion to those guys? Request you to also introduce, probably what sort of things your portfolio companies are doing around it, and what's your suggestion on those points?
Right. So obviously, companies which are not yet funded and have a large burn, and they need to extend their runway as much as possible. So cash has to be preserved and kept as long as possible, because funding right now, though in some sectors it is active, but if our company is affected negatively by COVID, then funding has taken a pause. So we have portfolio companies, we have companies for whom we are raising money. Those have almost stopped. So I'll give you an example of a company that we're dealing with. This is a company, a B2C services company, which used to provide automotive services, repair services to two-wheelers and three-wheelers and so on. So obviously after the lockdown, they immediately, before the lockdown, they were negotiating a fundraiser of about 1.5 crores from angels. Immediately after the lockdown, angels said that we are going to take a pause. We will, we will see how the situation emerges, and then make the decision about investing. So when they were raising money, their runway was only 2 months. That they had 2 months runway. So we said, since funding came into a pause, we told them that, look, you have to now extend your runway in some way. Can you renegotiate your landlord agreements? Can you look at a salary cut of your team? If there is somebody who is not really contributing to the top line and is only adding to the cost structure, you may think of taking a pause on that person. So one way or the other to reduce costs. This particular company, since they had two-wheeler mechanics with them, actually started distributing grocery items to their customers. And that became a revenue source, not only for the company, but also for the service people who were the vendors to the company. So they were able to save that and therefore extend their runway by, a couple of months. So I think extending runway is the key thing. Maybe they can pivot. Pivoting is another thing. One of our portfolio companies was running co-working spaces. As you know, co-working space is not going to be well populated for some time. So they are exploring how they can create virtual co-working space, which means that a team may be working from home, but they need to coordinate a lot between each other. They need to call each other, exchange files. So can we create virtual co-working spaces? So a lot of possibilities and pivots are available to startups, provided they sort of explore and people have time now to explore all these things.
So I think whatever you suggest, it is a harsh exercise for the startups. I don't think it's going to be easy, as they're already working on very tight budgets, and also cutting a tight budget would be very, very impactful for their growth also. So one suggestion, this is from your feedback only. One suggestion would be, what is your suggestion right now to the startups? Should they focus on growth, or should they focus on sustainability right now?
So I think right now they should focus on sustainability. Those companies which are negatively affected by COVID are unlikely to be able to raise money in the next 1 to 2 months. After the lockdown gets over, and that is getting over in different parts of India around 15th of May or end of May or whatever. That will be the time when the real impact of what is the economic impact, how demand is going to change. Those things will be clearer, and that is when investors will get back to the market.
Glad. And what is your suggestion to the startups who are yet to raise money? Should they try to raise money now? Should they wait? And what could be the numbers which can go down further?
Right. So I think for startups who are yet to raise external money, they can and assuming that they are not very much impacted by COVID, right? Or it is only a very short-term impact, they can still look for money. It all depends on the type of business that they are in. Right? So if somebody is in ed tech, it actually is a good time to raise money. Somebody is in healthcare, somebody is in AI, somebody is in farm to fork. These are areas, sectors which are doing extremely well. Companies are seeing 20, 30% sort of weekly growth. We have portfolio companies who are seeing 30, 40% weekly growth, and there are investors for those companies. So it depends on what is the sector that you're in will impact.
Glad. And this was more about somebody who has started business looking to get into the fundraising exercise or are already into fundraising exercise. What is your suggestion for somebody who's yet to start, somebody who's getting into a startup? What's your idea to them?
Very interesting. So because this is actually the right time. So while existing businesses are trying to pivot and trying to find new business lines of business to go into, for people who have not yet started, this is actually for them to conceive what the world will be post COVID and what are the areas where things are going to change. It's also a very good time because people are available, interns are available, people with co-founders are available. So a lot of talent is available. Costs are low. People are working from home. You can experiment with a lot of things, and also customers, whether individual or business customers, they are looking at ways of saving money. So if we have something by which they can provide as they say in India, Sasta, Sundar and Tikau sort of model, a lot of people are willing to experiment. So people who are buying something expensive now, can you give them a more economical product is something that would interest people.
Glad. So continuing, you had mentioned there are certain sectors which will do well for good time and all are already doing good well, like health tech, ed tech, logistics companies, some special niches of e-commerce as well. So the people who are already working on those areas, what's your advice to those startups?
Right. So I just to give an example, we have invested in two companies in the last 1 month. One of them, which is public, is called a company called Planet Spark. And there's another transaction which is going through, which is in the area of providing green tea to customers in India and overseas. So there is actually a rush of investors in some of these sectors where they see, because children are at home, parents are involved with their education, and schools are not running. So overall, any sort of ed tech products, people are willing to try out, and therefore investors are also willing to invest in those. Give you another example. There's a Canadian company that we were looking at, which is in the area of call center analytics. And because for work from home, call center management has become an issue. So this product was very useful for call centers which had to let their agents work from home, and they had a huge increase in their number of inquiries. And we actually said that aggressively increase your fund requirement, because you have to go aggressive in the market now and reach out to as many customers. So hire more salespeople, expand your business operations, and so on and so forth. So yes, for those chosen few companies which are in the right areas, this is the best of times.
So I think for some of the companies which are into these areas, there would be an opportunity to get acquired, to work on lots of strategic deals. What will be your idea? Let's say in case if somebody into tech or very specific health tech areas, they get an acquisition offers from a bigger business or a bigger
Yeah.
startup.
So this is the time, this is the time for those chosen few that you will actually get acquisition offers, even if you're a very small company. And that's actually happening. You would have read recently that TCS and Mahindra British Telecom, they are looking for acquisitions in the product area. So we will see a lot of M&A happening, especially in the product area. Well, now here, is a question of what is the right price to sell out. So is it today the impact of COVID is just getting felt and maybe it's too early for you to sell out. But at the same time, the market is so uncertain that you don't want to let go of an opportunity also. It's a dilemma sort of situation. But my guess would be that at least make some money, put that money in the bank, and maybe the rest of it you can sort of negotiate based on the performance of the company. Because I think cash is king right now. So if a founder is able to make some cash, get some cash for his startup or her startup, he should actually bank it rather than wait to see how it all pans out.
Great.
What I'm trying to say is partial sell and balance can be on future performance. But don't let the immediate opportunity go away.
But do you think such opportunities coming where companies are interested in partial buying?
Yes. So, even from the acquirer perspective, if you look at it from the acquirer's perspective, they are not paying the full 100% amount right now as the performance goes. So buyers will always be happy to give you a performance linked exit, right? If your product does well, then they will give you something related to that, and they'll give you some money upfront. So buyers are always willing. I think if the seller is able to negotiate that well, that would be a good opportunity.
So the threat or probably the challenge of COVID is common to everyone, but the recovery path for everyone will be very different. Some will see a U-shaped recovery, some will see a V-shaped recovery. For some, it might be a W recovery as well. There are different recovery paths for different areas of businesses. Any suggestions to different businesses?
Right. So I think one of the things is that all companies and all of us are at home, so we are not wasting time going to office and coming back, not getting stuck in traffic. So we have a lot of time with ourselves, even though some of us seem to be busier than we were before. But there's a lot of slack. Maybe your customers are not buying right now. Your customers are busy doing other things. So this is the time where you can build other features of your product, maybe include market segments which you have not attacked so far. So for example, Swiggy is doing groceries today. So they realize that not so many people are ordering from restaurants. So maybe we can do groceries, and groceries is a major requirement for people at home because they're not roaming around so much. Or I know that grocery stores are doing pharmaceuticals. So everybody is trying to figure out opportunities which caters to the same set of customers that they are addressing in their previous avatar. So for example, our portfolio company, as I said, were providing repair services to their customers. Today, they are offering grocery services to their customers. So there's always an opportunity to build new services. But also from a technology perspective, there are opportunities. I was talking to a company in Baroda, and they were saying, can we provide telemedicine services to our doctors? So doctors get aggregated because nobody wants to go to a doctor right now. So, and yet, their services are available. So can we make those available through, an online mechanism where payment can be collected? So a lot of new revenue streams can be looked at from a startup, especially when you have some slack in terms of time.
So during our conversation at the very beginning, you said there are some harsh measures which will be taken by, which have to be taken by the startups. Some of them include cutting your manpower. So do you see any sort of best practices among your portfolio companies with respect to the HR issues? Given that teams are not meeting, they're anxious, any sort of best HR practices that they are following?
Right. So in fact, today we just gave out a painting competition to our entire team and said whoever does the best painting will get 500 rupees worth of chocolates. So I think we are all, especially younger people, are used to a certain level of socializing, and they suddenly are staying at home, and we need to keep them motivated. They're also very anxious about hearing about their um, colleagues and peers losing their jobs, and therefore that's one more need to keep them motivated. Uh, so the people that people need to be motivated at a much higher level. They need to be communicated more frequently. So for example, a lot of portfolio companies have a daily call where all the entire team gets together and has a call in the morning, and they have a weekly video chat so that all can get together and interact with each other. And as time goes by, we will discover so for the few that who will have to take the harshest decision of letting people go, I think counseling for them and helping them to find their next job opportunity, and maybe they can become entrepreneurs themselves. For those who have to take that line, so most companies, what they are doing is they're avoiding layoffs and saying we will all take a salary cut, and then when even that is not possible to maintain, only then going for layoffs, because layoffs is the worst sort of situation that a startup has to deal with. But this is not a time to be brave. So even Swiggy, which raised, I think very recently Swiggy raised about $30 million, and they have laid, and it's come out in the public that they have laid off 1,000 people. And what actually may have happened is they would have laid off many more people than what appeared in the press. So this is not the time, especially for young startups, to be brave. ये बहादुरी दिखाने का time नहीं है. This is the time to conserve your capital, because by not laying off people, you are jeopardizing the employment of other people also. So this is the time to conserve and not be brave, and not be foolhardy.
Right. So to the participants, my feedback is we'll take your questions. You can just put your questions in the Q&A box, which you can see in the webinar. Yeah. In another 5 minutes or so, we start answering the audience questions. So continuing our discussion, coming to one basic question.
Dheeraj, you are not very well heard.
Hello?
Yes, now it is better.
Okay. Coming to some basic questions which startup wish to know from the angel's perspective, especially, how important is the burn right now? Would angels resist investing into high burn companies? Would they prefer the low burn companies for this time? Sushant, you are on mute.
So at this time, angels and VCs are very concerned about burn. So just as entrepreneurs are concerned about burn, angels and VCs are very concerned about burn. So they would like to see what is the minimum possible burn for the company to survive, because they want to put their money for the growth of the company, not for the survival of the company, right? So they are looking at companies that if I'm putting in 1 crore of rupees and out of which 50% is going to go in survival, then where do I put in the money for growth? Where's the money left for growth? So they are looking at companies with low burn and put money for expanding to a new market or developing a new product, which is focused on growth. So today we have to, and it's not like a short-term thing. VCs are saying that, look, for the next cycle of VC funding to come will be maybe 1.5 years away from now. So they want to see that the money that they're investing in a company today should last out that 1.5 years period. Because in the interim, maybe funding will not be available. If the company goes down in the interim, then the VC also loses money and the entrepreneur also. So they're very concerned that the money that the company is able to raise now does give them a runway for at least 12 months. And therefore the burn has to be very low.
So this was my question. That means you suggest that somebody who's raising now should look at a horizon of approximately 18 months, not 12 months, which used to be a
Yes.
earlier practice.
Yeah.
So
because raising money is going to be harder going forward.
Okay. Do you think that valuations will be hampered in the current scenario?
And so it's a demand and supply. So today there are lots of entrepreneurs who are willing to raise money at much lower valuations, and investors see that there's more demand for capital than the supply. So they will start also insisting on lower valuations. So valuations will definitely come down.
This will be from the ecosystem's perspective. You work with angels very aggressively. There are over 130 angels on your platform. There are plenty of opportunities in the listed space, in the public markets. Do you think that looking at those opportunities, angel investments or the angel route will take a hit, or probably people would look at primary markets or secondary markets compared to alternate markets?
No. Yeah, so this is what the thought that did occur, and today most public markets are 30-40% lower than what they were early March, and this is not only in India but all over the world. And historically we have seen that stock markets do trace back their path in 1 year or 2 years or 3 years from where they were in before the crisis happens. So, but at the same time, I think so. In the normal course of event, people would start rushing to the stock markets. But the answer is they haven't, and the reason for that is that there are many industries which will have a long-term impact because of COVID. We don't know the full implications, but petroleum, for example, will people travel so much as they do today? So anything related to petroleum, or we have seen that we could do this whole month without visiting a bank. A lot of us did not visit a bank this whole month. So will new age financial services companies take over what banks are doing? So these are some of the or travel or transportation or hospitality. All these industries are going to go through huge transformation, some to become more efficient, some because of long-term changes in their demand. So I think some of the investors, angel investors who have exposure to the stock market and the real estate market, will still want to invest in these new age companies which are disrupting the old world. So I've just met a company from Singapore which is doing virtual event management. So they are doing industry exhibitions which are completely virtual, and they're doing well. They're doing virtual dinners, industry dinners. So a lot of new types of businesses will emerge, and angels are risk takers. So I think that the interest of angels will continue. Maybe wane for a little while. The impact of COVID, as it becomes more evident once the lockdown gets over. But demand from early stage investments will not go away. That is my view.
Okay. So though we have some other questions lined up for you, but I will also try to take some questions which are there in the Q&A.
Sure.
So Juhi is asking what is going to be the effect on the international trade part, especially imports and exports. How do you see this?
Right. So I think there will be more travel. As we can see today, there will be more travel restrictions, and countries would want to focus on their domestic demand first and then allow exports. So that is one. And two is that there is some news that countries will not be so comfortable in outsourcing from China. I don't know how true or not, but I think goods, services of import export of goods will take a beating for some time. And therefore, import and export of services and IP, intellectual property, will actually increase. So I see a lot of more possibilities in where for business continuity, people will want services to be outsourced from India. People will want more software products, SaaS, and stuff from India. There is also an interest, growing interest in natural products. Whether I told you we are selling, one of our portfolio companies is selling green tea in the US, and that has seen a 30% jump in sales because people are concerned about immunity and having natural products. So there is also potential for this. In the short term, there will be some dislocation in export of physical goods because as the the infrastructure and transport sector starts getting back into gear. But for services and IP, I think it's a great opportunity for startups.
Thanks for that, Sushant. Another question from Anurag is, I'll just quote it as he has mentioned. How do you see consumer startups to fare in the upcoming months, which are in the beverages market? How can consumer startups use tech to be able to survive and scale?
So I think one of the things that is changing is the distribution structure. So we were used to, uh, uh, wholesalers, CNF agents, retail chain, and companies had to go through this entire complex distribution structure, which the COVID and some of those new startups have tried to break. And I think that will continue to change, and direct to customer will become, or subscription services where companies are able to sell goods directly to the customer without going through the distribution network will become more important. So beverages typically was uh, uh, sold through the retail trade, and that is because of the nature of the product and the challenges of going direct to home because the volumes were not large enough to take care of the logistics costs. So I think one of the things that they could explore is selling to the new subscription services such as Big Basket, or there is something called, I believe, Swiggy is also starting with their subscription services. So a lot of companies will start subscription food, vegetable, and grocery subscription services to their customers. And those are the sort of channels that the beverage company can explore rather than only focus on the general trade. The other sector that they may want to explore is the um, mm, organized, hotels and companies, because a lot of companies today are buying again direct from the uh, manufacturer to, or the producer to their employees. So I know that large companies are supplying groceries to their employees across Bombay and Delhi. So those are the sort of new channels that will come as we go forward. Not
So
only
just
the general trade.
building upon this, there is another question from one of the audience members, Rishi. So you say that there are tremendous opportunities or there is a tremendous demand in the DTC e-commerce side, but this has also taken a toll on typical brick and mortar right now. So mostly consumers, as he quotes it, that they will have least confidence in purchasing from retail outlets. What's your suggestion for somebody who is into the brick and mortar model?
So I think we have to be realistic and explore how can we go and make it easier for the customers to purchase our products from home. Can we make it available through WhatsApp so they don't have to make a phone call? Do we have delivery services? In the US, I was seeing that there are robots which are taking deliveries from the retail shops to the homes, right? And that's become a big service. So there will be new ways of delivery, and uh, each one of us will have to relook at how we are distributing our product. Uh, if some of you would have visited Book My Show, Book My Show is the site which allows you to purchase tickets for movies, and there are no uh, movies showing right now. So, and it'll be a while before people go back to see a movie, in a movie hall. So they are finding ways of, uh, sharing content on their website, and probably will get into uh, becoming a Netflix-like service where they will sell entertainment as a subscription service rather than people going to movie halls, right? So I don't want to sound drastic, but some of these changes, of course, people will go back to restaurants and will go back to movie halls, but it will take some time. And therefore, it's an opportunity for you to build alternative channels in the interim.
So another feedback which I would like you to add is, and also one of the questions from one of the participants, that what's your strategy for funding startups with similar backgrounds to existing portfolios? So let's say you have some company in your portfolio and other propositions come in this time. What's your feedback to that?
So I think, we are largely a hands-off sort of angel network. And while we avoid taking directly competing companies, but if there is an exceptional situation, we would be willing to invest in competing product companies. So we don't have any legal requirements that prohibit us from investing in competing companies. And we have not done so far, but I don't see that is a constraint as well.
Great. So I understand that we had discussed this in our session, but there are a couple of queries on the similar question from various participants who want to see that what's going to be the investment scenario in some time. In case if we can just have a repeat answer on that.
Right. So I think that fundamentally people will continue to invest, right? People will have profits and they will continue to invest. Business will continue and we will continue to live. So, the world is not going anywhere. The world is not coming to an end. Exactly how it is going to pan out, nobody knows. But if we just go by history of other financial crises that happened, we can say that investment sentiment will take some time for it to come back, whether it is the stock market, whether it is angel investing, whether it is private investing, will take some time to come back. That is also a given. Now, between the different sectors, some sectors will come up, some sectors will go down. Recently we saw in India that some of the pharma company stocks really went up, and likewise in the US. So some sectors will become investor favorites and some sectors will go out of favor. And that continues to happen across, good times and bad. And that will continue. The COVID will bring up some favorites and will relegate some people in the background for a while. So I think that is the only change specifically to COVID that will happen.
So the next feedback which I would request is again on the investment side only. Do you think the stage of the startup would matter a lot in the investment decision right now compared to what it used to be before COVID?
Yeah, right. So I think, as I said, people have become more risk averse now. So earlier on, they would take a bet on a company which has a great product or a great idea. Today, they would like to see the company showing actual traction with customers, if not actual revenues, right? So they don't say they want to be risk averse. They don't want to take the market validation risk. They don't want to take the product risk. They don't want to take, the runway risk. So people have become more risk averse. So if an earlier company was getting funded at an earlier stage, they will now get funded at a later stage.
Hello.
Yeah, go ahead.
Yeah, sorry. I think I had an unstable connection. So another was, Amit is asking, are there any favorite domains for the investors in coming times? Like somebody is looking more pro B2B or somebody is more pro B2C.
Right.
What will be
Again,
your feedback on that?
so it depends on the product category. So, today, uh, you know, individuals or consumers are concerned about their health. They're concerned about saving money. They're concerned about convenience. So these are the sectors where we see or investors are investing. Likewise, companies are concerned about saving costs, being able to work from home, being able to have multiple vendors so that their business continuity is maintained. They're looking at financial products which can tide them over tough times. So it is not that any particular sector will become investable as opposed to other sectors. So today governments are buying a lot of uh, relief material. They're buying medicines, equipment. There may be a fundamental shift in the way the government deals with the health sector, because they realize that even the best, most developed countries realize that how weak their health system was. So yes, companies which are providing these sort of services might get a lot of business from the government in the short term. But those, as I said, are sectoral things. But in the long run, I think business will continue, consumers will continue to consume, and governments will continue to do what they are. In the long run, nothing much, no fundamental changes will happen.
Right. So as we're coming to an end, I'll just take one last query, which
Yes,
is a
please.
combination of couple of queries people have raised. A lot of people are asking, what's your view on the healthcare, wellness, and consumer products which are into the same domain? How the industry will flourish? How investors will look at this?
Right. So, in the recent past, even before COVID, there was a general interest in wellness and health and fitness. And we saw, a lot of companies come up in that space. Even food delivery companies were sort of creating products which were low calorie, and ice creams with lower, lower amount of fat, and so on and so forth. So there was a general trend, people moving from non-vegetarian food to vegetarian food. There was a general trend that was anyway in place. With COVID, this consciousness has increased multifold. So, so there will be a a much bigger demand and trend towards these products, because people are concerned about their immunity, people are concerned about their weight, people are concerned about their sugar intake, and so on and so forth. Now, uh, companies which have already established products in these brands, they have a head start because they've already established a market. People are already using their products, and it'll be easier for them to, sell. But that does not stop uh, uh, people from exploring niches which are currently not occupied by somebody. So just this morning, I was talking to somebody and saying, people are replacing animal-based proteins to plant-based proteins. So there are, shakes, and there are uh, bars, and there are biscuits, which have a high concentration of plant protein, uh, relevant for Gujarat, right? So, um, but that is a general trend across the world and across India, that people are going toward this. So there are many niches within plant-based proteins. It could be a shake, it could be a granola bar, it could be a coating of dry fruits. There are so many possibilities which are there. So people would want to try out products which don't exist in the market today, because people are willing to try out new things and not go after the established brands.
Great. So one would be, as we are coming to an end and would like to summarize as quickly as we can. Last question from all the participants who are there. What will be the best way to reach out to angels in coming time, and especially lead angels?
Yeah, right. So I think I always say this, that, making a cold call, a cold email is not a no-no. But if you connect through LinkedIn, connect through Facebook, you get a personal touch. So it's best to, of course, my email is available and you can share that. But best way to connect is through the social media, and today we are all on social media. That creates a connect. Today, of course, physical events are not happening, but the other way to meet investors, and not only lead angels, but any other angel or VC, is to attend events such as the one that we are holding, to connect with VCs, because that gives that personal touch to the entrepreneur as far as the investor is.
Along with this, there is an accelerator program that you are running right now. I have shared the link to all the participants, but would also request if you can brief us on that as well.
Yeah, so we realized that a lot of young graduates are looking at entrepreneurship as a career, and as I said, this is the best time to look at entrepreneurship. So we would like to know your views about what sort of entrepreneurship development programs that you would like, how much of mentoring and how much of tutorials you would like in that, and would be very happy to extend a discount to you when our product is back in the market. So please do fill up this form and leave your email ID so that we can reach out to you when the product is available.
So to all the attendees, you can just go to your chat box. We have shared that link along with Sushant's email ID. As we are coming to the end of this, I would also request Pyali to do before and summarize it. I request time of Gujarat University, I once again thanks all of us. Yeah, can you please come on?
I could not hear you. Just that
I was saying, if we have just concluded answering most of the questions which were relevant to the session, and all the questions which were already curated are already been answered by Sushant. So I would like to conclude here, and would request if you can just summarize and conclude the session.
Absolutely, Raj. I think it was fantastic to hear, so many different things that are important, and whether it is GUSEC or whether it is TIE Ahmedabad, we are constantly sort of in the way looking for ways to help our startups, and we get all of these questions. I think are quite common, and we have been hearing them quite a lot. So I think it was extremely useful, Sushanto, to get your views, and I think these are literally like kind of guideline I would consider for the startups to think over for the time of the crisis and post. And these are the learning times. I think it's getting such kind of challenging times. Probably the beginning of someone's journey is sometimes, I would say, probably the positive side of it is you start learning so many things, and
at the same time,
probably quite strong. And in everybody's journey, these ups and downs will continue to happen. Entrepreneurs especially, it is never an easy one. So from that perspective, I think I'm very happy to be getting to know a lot of things. And this video also, I think once we have this, I'm going to be sharing it with a lot of other people who have not been incidentally able to join today. So a big thank you from my side at least, to Sushant.
Thank you, Pyali and Dheeraj, for hosting me, and I really enjoyed all your questions. Somewhat difficult though, Dheeraj, but I hope I was able to answer them.
I don't think there are any questions that are difficult for you, at least in the investment space.
No. These times are difficult, so the questions are also difficult.
Let's hope that we get over this as soon as possible.
And happy to associate with, and happy to associate with TIE Ahmedabad and Gujarat University for all your other initiatives. and look forward
Glad.
to seeing you in person sooner than later.
We are hoping
Bye,
to do
guys.
that too. Thank you so much. Thanks all participants
Thank
for
you.
joining.
Thanks, everyone. Yeah.
Thank you.
Bye-bye.